there, welcome to Informed Investing. My name is Don Lawrence. I am the CEO of STA Research, and our platform is stocktargetadvisor.com. I am a financial analyst and a trader, and today and every day we bring you the top analyst ratings that we think are the most notable, and we dissect them and look at their validity. Today we start off with AMD Advanced Micro Devices, and Bank of America is maintaining their buy rating on the stock, and they are reducing their target down to 110 from 160. We think the stock is fairly valued looking at it on the charts. Obviously it could drop a little bit more. We should probably, would suggest waiting for it to drop a little further before you sort of enter. You could sort of hedge your way in and buy slowly and incrementally. But it definitely seems fairly valued based on the sort of market conditions at the moment. Going on to BlackRock, we've got three ratings out on BlackRock today. As most people know, BlackRock has been under pressure. Their sentiment has been under pressure, just sort of being caught up in the pandemic transfer of wealth sort of theory that many small investors and conspiracy theories talk about with regards to their involvement in the pandemic. So their sentiment's kind of a little bit under pressure. So it is obviously bleeding into the stock price, and Goldman Sachs is cutting the target down to 710 from 830, maintaining the buy rating. And KBW is maintaining the market perform rating, and they are cutting the target down to 675 from 719. And ourselves at STA Research, we are maintaining our hold rating. We are cutting the target down to 650 from 800. Again, that stock is it's fairly valued, I think, looking at it sort of with the market conditions and going forward. Obviously if the market changed, it might be a bit attractive, but I think at this point, with market pressures, obviously BlackRock is sort of tied to the markets, and the performance is relative to that. So it's sort of best to be cautious on any acquisition of the stock at this point. Next we go on to DraftKings. We've got three ratings on that. We've got Barclays maintaining the equal weight rating, and they are that's an initiation with an equal weight rating, and they are posting a $14 target on the stock. And we do have GMP Securities also that just initiated the stock with an outperform rating. They do have a $25 target on the stock. And ourselves at STA Research, we are maintaining our buy rating and a $15 target on the stock. And the stock is getting into sort of fair values, come up a bit. It's still probably undervalued, but we're still, I would still be, obviously, like most stocks right now, a bit hesitant there with sort of macro pressures and rising rates and inflation. So definitely could have more upside looking at the charts, but it definitely could also be poised to run into trouble with a downward pressure on the markets. Next one we go on to is WeWork. It's getting quite a bit of coverage sort of in the last little bit here in the media. UBS is initiating coverage of the stock with a buy rating and a 650 target, and ourselves at STA Research are assigning a speculative buy on the stock, and we do have a slightly higher target. We're showing a target of $7 per share, and that's a 12-month target on the stock. And here we believe this stock is a good valuation, good entry point. Of course, right now you've always got to look at the market conditions, and regardless if it's the stock looks like it's valued well or not, it can also always drop further. So on the charts it looks decent, but we always caution right now to buy anything in this market. So we just basically say what we see, that it does look attractive, but it could always look more attractive. Over to Canadian miner TECK Resources. Deutsche Securities is maintaining their buy rating, but they are cutting the target by $4 down to 48 from 52. And ourselves at STA Research, we are maintaining the whole rating, and we are cutting the target to 30 from 38. We talked about this before, how the mining stocks are really sort of in a very strong bear market. And as most know, in those mining bear cycles, they can be ratherly aggressively punishing in a downward fashion. So I mean, we could easily see this. These especially base metal miners drop another 50% or so, getting half from here. So it just really depends. It depends sort of sentiment of the markets. Obviously, the economy slows. It's just the assumption that you're going to have less demand for metals. China also having further lockdowns and whatnot. So it's a very, we had a great bull run there in the metals. A lot of those miners, especially the Canadian ones like TECK and First Quantum Minerals, exceeded multi-year highs there. They haven't touched for an awful long time, or even ever. So it was a very good run there, but unfortunately when that cycle turns on those miners, it can be quite aggressively punishing. So just keep an eye out for that, and just be careful with all those mining stocks. All right, guys, that wraps us up for another day of top analyst ratings. If you have any questions, leave them in the comments below, or email us at min@stocktargetadvisor.com. And if you'd like to see more analyst ratings, check out our analyst rating tabs on our website. We have the best coverage right around the world of all analyst ratings. And if you like the analyst ratings delivered twice a day in your inbox, pre-market and midday, sign up for a premium service. It's just $5 a month. You get that and other wonderful research tools alongside of that. Well, guys, thanks for tuning in, and remember, your best trade is always a hedge. Cheers.